Hello fellows, welcome to my channel. This channel is created for educational purposes only, dedicated to people who want to learn how to trade. Either you want to trade stocks, crypto, commodities or Forex. You will find high quality educational material. Either you are a beginner, advanced or an intermediate trader. For viewers that want to see more action and how we apply the theory in real trades, you can visit our live channel. Here we are trading our live account and applying the theory, proving that it can be done, while all trading profits go to our subs. However, as a beginner, I do not recommend starting with any real money. Trading is very risky and challenging. However, a risk comes always with a reward. You will find 50 videos to understand the theory, 12 sections. Each section is a playlist consisting of several videos. I do not recommend skipping chapters and trying to take classes from the beginning. We are using verified sources to provide the most accurate information. Remember, this is an educational channel and you will always trade with demos to avoid the risk. Make profits in the market is not the easy passive income you have in mind. The entire material is the same as you will find in most trading courses. The material is totally free and you don't have to pay any guru to learn generic information or waste thousands of dollars. So if you want to support us, subscribe, like and leave a comment for the YouTube algorithm. And you can post your progress in our Facebook page. Thank you very much and trade safe. Harmonic patterns were mentioned by H. M. Gartley in 1932. Later the theory was developed by Larry Pesavento, who wrote a book, Fibonacci Ratios, with pattern recognition. Gartley wrote many articles on the stock market, but his best work is considered to be his book, Profits in the Stock Market. In this episode we are analyzing harmonic patterns. Harmonic patterns use geometric patterns by utilizing golden ratio numbers to define potential turning points. Harmonics is a part of the technical analysis that attempts to predict future movements. I suggest going to the golden ratio episode before starting this one, and also the classic patterns episode. Many technical enthusiasts are using harmonic patterns strictly, and it's considered to be a standalone method. There are some advantages and disadvantages that we will see in this episode. There are several levels and types of these patterns. As the prices will eventually pass from these areas, it is easy to be confused. The accuracy of these patterns is debatable. They can be used as signals, however, and as a part of a self-fulfilling prophecy in the markets, we need to know and we need to see what other traders do. The variations and the types are too many, and here we will see the majors that you need to know. Butterfly, bat, crab, Gartley, 3-drive, ABCD. Again, these are the basics, and the main reason we need to cover them is that we need to know what other traders use. Unlike classic chart patterns, harmonic patterns must meet specific movement requirements to be considered valid. These requirements reduce subjectivity in comparison with classic chart patterns. It will be hard to spot them, but in time and practice, it will be easier. The easiest pattern of all, the ABCD. There is a bullish and a bearish variation. Since the pattern is the same principles apply to both cases. This pattern is composed of 3 movements and 4 points. The lines A, B, and CD. These lines are also known as the legs, while BC is called correction or retracement. Remember what we said about correction and retracements. The length of line AB should be equal to the length of line CD. The time it takes also for the prices to go from A to B should be equal to the time it takes from the prices to move from C to D. This means there must be an almost identical behavior in prices between these two major lines. It's very easy to search for the pattern and start noticing irrelevant swings just to complete a pattern. We will see some major drawbacks in these harmonic patterns. Another variation is the 3-drive, identical. The 3-drive pattern is an ABCD with 1 extra wave. It has 3 legs known as drives and 2 corrections or retracements. These corrections should be identical. Point A should be 61.8 retracement of drive 1. Similarly, point B should be 0.618 retracement of drive 2. Drive 2 should be the 1.272 extension of correction A, and drive 3 should be 1.272 extension of correction A. Should be 12.72 extension of correction B. When the pattern is complete, it's your signal to enter the market. Since the pattern is identical to ABCD, you should already be prepared earlier. So if you enter the market earlier and your trade isn't going as planned, another wave might be on the horizon. This will help you adjust your stop loss and shows you what to expect from the market before even entering the market. The rules here are similar. We need to see identical market behavior for all legs. Also, prices won't be perfect as we said. This applies for all patterns and everything we have discussed so far. The Gartley pattern outlined by H.M. Gartley in his book Profits in the Stock Market is also called the Gartley 222. In the page 222 you will find this pattern. Of course, in this channel we are not doing some meaningless telemarketing to buy books, and all the material you need will be found here and totally free, but we need to show some respect to traders who literally devoted their entire life analyzing the market. I wish I could say that these harmonic patterns are 100% accurate, but I cannot. The market is unpredictable. You already know the ABCD we mentioned in previous chapter. The Gartley, it is based on golden ratio and gives a strong indication that prices might actually reverse. This pattern can be hard to spot, and you need to practice to golden ratio a lot before starting identifying all these patterns we will mention in this episode. It can get confusing when you pop up all these golden ratio tools. The key to avoiding all the confusion is to take things one step at a time. This is the reason we started with the ABCD in the previous chapter. Gartley pattern contains a bullish or bearish ABCD pattern, but it's preceded by the point Z that it's beyond point D. The theoretical perfect Gartley pattern has the following characteristics. Move AB should be 618 retracement of move ZA. Move BC should be either 382 or 886 retracement of move AB. If the retracement of move BC is 382 of move AB, then CD should be 1272 of move BC. As a result, if move BC is 886 of move AB, then CD should extend 1618 of move BC. From CD, move CD should be 786 retracement of move ZA. Again, it will take time to master and identify this pattern, so it's normal to get confused. Optical memory and observation is what you need, but as soon as you get the idea of golden ratio, you will be able to trade this pattern like pro. Scott Carney found another harmonic pattern called the bat in 2001. The bat pattern is slightly different from Gartley at an 886 golden ratio retracement from Z to A leg. Its inner retracements are also slightly different. Bullish and bearish versions are the same. Move AB should be 382 or 500 retracement of move ZA. Move BC can be either 382 or 886 retracement of move AB. If the retracement of move BC is 382 of move AB, then CD should be 1618 extension of move BC. As a result, if move BC is 886 of move AB, then CD should be 2618 extensions of move BC. CD should be 886 retracement of move ZA. Now probably you understand why they called harmonic patterns, as they are all made from golden ratio. Another version that comes from golden ratio is the Newton bat, the butterfly harmonic pattern. The butterfly pattern was discovered by Bryce Gilmore, who used different combinations of golden ratios to identify potential retracements. Most commonly referred to as butterfly is another variation of the major patterns we described so far. It's a 5-point harmonic pattern with Z, A, B, C, and D. Similar to the Gartley pattern, the butterfly pattern has 4 waves that are labeled ZA, AB, BC, and CD. A theoretical butterfly pattern is defined by the 0.786 retracement of the move AB in compared to ZA. The butterfly contains these specific characteristics. Move AB should be 0.786 retracement of the move ZA. Move BC can be either 0.382 or 0.886 retracement of AB. If the retracement of BC is 0.382 of move AB, then CD should be 1.618 extension of the move BC. As a result, if move BC is 0.886 of AB, then CD should extend to 0.618 of BC. CD should be 1.27 of 1.618 extensions of move ZA. You will find in the description a cheat sheet with some real market examples to help you. I will try to update them live and add each new pattern that I recognize, so this will be helpful in your trading. For this episode we didn't use any real market examples. This would make things much more complicated, especially for new traders. Crab is another Scott Gartley discovery. The crab is another harmonic pattern followed by the same golden ratio principle: ZA, AB, BC and CD. The most important feature of the crab pattern is the 1.618 extensions of the ZA movement. The AB leg retracements between 38.2 and 61.8 of ZA. This is followed by an extreme projection of BC 2.618, 3.14, 3.618, which identifies a valid area for the completion of the pattern and the potential reversal. A bearish crab will track a dip from point Z to point A, followed by a price rise, a slight fall, and a sharp rise to point D. Another slightly different variation, well known, is the dip crab. This is slightly different from the crab pattern outlined above. The only difference is the BC projection can range from 2.24 to 3.618. This length makes the difference between crab and the dip crab. Last in the animal kingdom, the shark pattern. Also discovered by Scott Gartley, the shark pattern has some similarities with a crab. It's a 5-leg reversal pattern. Points ABC are also here, and we have additions of Z and Y. A shark pattern must fulfill the following golden ratio rules. The AB leg should show a retracement between 1.13 and 1.618 of the ZA leg. The BC leg will be 113 of the YZ leg. The CD leg targets 0.500 of the golden ratio retracement of the BC leg. All shark pattern trades are taken based on point C, with the D point is used as a predefined profit target. The market moves in cycles. Prices do really form geometrical patterns, but there are several disadvantages that in my opinion are far more important than the advantages that these patterns can offer. Strictly, I do not recommend for new traders to start with those patterns. Many school of traders are using this pattern as the alpha and the omega, but they are not perfect and you will need a lot of experience and time to identify them. A strategy of trading more simple patterns will give you potentially more profits in the long term. Combining them also with those harmonic patterns that we are mentioning in this episode will indeed offer you amazing results. However, there are several drawbacks. Pattern can change between them. There is no guarantee that a harmonic pattern may complete as expected. As the pattern evolves, it might change in form from one pattern to another. Complexity and rarity of these patterns to occur doesn't guarantee success while trading them. You will start looking for them and you will start jumping to new markets that you don't know how to trade them. The patterns are too many. There are at least half a dozen harmonic patterns and it becomes difficult for a trader to study them. There is software out there that identifies this pattern, but most of them are totally garbage and inefficient. Predicting extensions is not so easy, as the market will play tricks on you and eventually passing from those areas. For example, in a simple alternative AB equals CD pattern, the length of the leg CD can be either 1.27 or 1.618 times the length of the AB. Contradicting signals is another common problem. Harmonic patterns, which develop in different time frames, may show conflicting signals, either with pattern themselves, either with indicators that you are using. Chasing those precise levels will cost you in several stop losses, as the market won't respect those levels so precisely, especially during high volatility. Harmonic pattern deals with ratios between swings. There is no limitation in time needed for a pattern to be completed. They are pure technical. A professional currency trader should certainly give importance to the fundamentals which strengthen or weaken a currency. When a large number of traders place a buy or sell order just because a pattern indicates a reversal at a particular point, then it becomes another self-fulfilling prophecy. By trying to identify them, you will get clumsy charts and would be impossible to trade. You might lose the entire trend by trying to identify a specific pattern. Understanding the main market behavior will take years to achieve. The recognition and the correct strategy to trade them will change in time. An experienced trader will start perceiving the market completely different than a newbie. So that's it for now. Go back, repeat the chapters you are not sure, and trade safe. So that's it for now. Thank you for watching our videos. I hope you enjoy. You know that we need your subscriptions, likes, and comments for the YouTube algorithm. Help us to make more content and trade safe.